Do you know how you can protect your finances and your credit score from the coronavirus? Stay with me.
It's too early to know the impact that this crisis is going to have on our lives. Of course, the most important thing is talking about, our health, about staying at home, and all these things that we have heard many times over the last few weeks. But the problem is that the finances are always affected when anything changes. So we are today with Julio César Cañas. He's an educator and a consultant on finances, and he's has a wealth of information that he's going to share with us today about what we can do to protect our finances, because the responsibilities keep coming. Our commitments with banks and lenders and all kind of people, our landlords, everything keeps running. So I am here with Julio. Welcome, Julio.
Thanks, Ines. Thanks for the opportunity. I mean, it's always a pleasure to share some knowledge and to serve as a guide, in these unprecedented times. And, we're living a crisis that no one has lived before. So obviously this generates a lot of financial stress, and we're here to help guide, our community throughout the process.
Yes. So the way I look at it, there are three kind of people who are going to be affected in this crisis. Everyone is going to be affected. Some people in some degree, some people more, and some people less. There's the people that has, that they are not losing their jobs. They might be even in a profession that is very relevant at this time, and they have reserves and to live through this crisis. Then there's the people that may have get a reduced income and have some reserves. Those people are in I would say, medium shape. And the worst, the people who are in the worst situation are the people who have lost their jobs and do not have reserves. So everyone has a different circumstance, and my goal today is to get the best advice for everyone, that even people who are not losing their job and have reserves, because at the end everything is going to change. So if you have money in the stock market, you have already lost some. So unless you have the cash under your mattress, that's the only way that you have it really protected. So even though we think that this is a completely different crisis from the crisis from 2008, in my experience, some people could have handled their finances differently at the time. And that's why I have Julio today with some recommendations and some insight on what is the best way to weather this storm. And the crisis will pass, but the effects may last a long time. So the better we are proactively working towards our finances, the better shape we're going to be in the mid and long term. So let me start with the questions. And what are the general recommendations you could give us at this time?
Well, in the middle of this situation that, again, no one has lived before, I would have to say that there are two key components or two key ingredients to overcome this collective storm. I would have to say that clarity and proactivity are the key elements in the middle of this particular crisis. And let me explain myself. When I talk about clarity, what I mean, it's basically, there is an old saying that goes like, you cannot manage what you cannot measure. So basically what I'm saying is that without a proper budget or any other similar way to control our expenses, it's almost impossible to make informed and smart decisions when it comes to managing your money. So what I'm trying to convey here is the idea that under the regular circumstances, most of the time people don't have a specific software or a specific piece of paper or an Excel spreadsheet where they have laid out all the income and their expenses. And that's a key mistake that most of the people have been making throughout the time. We need to have a clear view of our expenses, and we need a list of those fixed and variable expenses so we can decide what to do and come up with a strategy to overcome the current situation. And the second recommendation would be, beyond clarity, we also need a little bit of proactivity, because in the middle of this situation, everybody is going through the same financial storm. Everybody's suffering. This is like a domino effect that it's affecting all small businesses and all business owners around the country. And we need to understand that we have to make some calls and we have to start negotiating ways to alleviate our cash flow. Because if we had, certain problems with our job, we lost our job, or we lost the number of hours that we had assigned at our work, we are not getting the money that we used to get the last month. Of course, we're going to start having some trouble paying for our basic fixed expense, such as rent, mortgage, food, services, our car lease or car loan payment, etc. But we cannot, just wait. We are, crossing our arms, just waiting for the solution. Like somebody's gonna come, like a fairy with a magic wand and solve all the problems. We have to be proactive. And how do we handle that proactivity? Basically, once we get the clarity that I just recommended about our numbers, the next step is to start calling or sending emails to banks, all the other financial institutions, our landlords, just to let them know that we're going through a difficult situation and see how we can come up with a solution, which such solution should be a win-win. Because one of the things that I'd like to highlight is that, for instance, if you're negotiating with your landlord, you need to remember that your landlord is also a business owner somehow. And maybe, just maybe, that landlord also depends on your rent payment so he can buy food for his family. So we cannot expect our landlord to absorb 100% of our problem. We have to find, our way or a midpoint so we can arrange some sort of payment and come up with a solution that, again, is a win-win. So again, clarity and proactivity are the key ingredients to weather this storm.
And when you are negotiating with creditors, let's say your credit card or your bank for a mortgage, how can you be sure that it's not going to impact your credit?
Well, that's a good question, and I have to say that that's the most important concern that that a lot of people have out there in the community, and I've been asked that a lot. And I have to tell you, according to the CARES Act that was recently approved by Congress and signed by the president as of yesterday, there should be no damage to your credit score or your credit report during the situation, even if you take advantage of any payment relief or any particular negotiations. And according to the bill, it's starting on January 31st, and over the next 120 days period that you have after the cessation of the national emergency declaration, then lenders should be marking all your payments in your credit report as current. When you see your credit report, basically what they do is that when you pay on time, they put like a little green check mark on your credit report. And basically what the bill says is that you should be having that little green check mark along the way while we are in the middle of this situation. Again, even if you made some sort of new arrangement or payment arrangement or a negotiation with your lenders or your bank. So what happens is that even though there is this regulation that says that everything should be marked as current when it comes to payment, you must remember that we all are responsible of our own credit report or monitoring our own credit score. Because basically, we must be aware that credit reporting agencies such as Equifax, TransUnion, or Expedient, they can make mistakes sometimes because, in the end, it's also human beings who are behind all these processes. So basically, that's why it should be our responsibility to stay on top of our own credit report and credit records and check it along the way so we can make sure that our score is not affected by any of these changes. Let me give you an example. Let's say that you come up with a solution with your bank or your landlord where it states that, okay, we're going to forgive the payments for the next couple of months, and we come to some sort of arrangement. What I would recommend, and that's what we're doing with our clients, is that basically you should get a written confirmation of that new arrangement, either in the form of an email or a letter that you can keep up as a backup of the decision that was made. And in case there is something wrong in your report in the near future, then you can use that letter or you can use an email, again, as a backup to demonstrate that you were not late because you wanted to, but because there was a new arrangement and that shouldn't have affected your credit report. So any new arrangement that we come up with our lenders, with our landlords, with banks or creditors, we need to back up that with a written confirmation of the new payment arrangements just in case.
Great. Great. That's a very good recommendation. It's a really, really good because sometimes people say, "Oh, I spoke with," but it's not enough. And
Yeah, that's
tech
right.
is the norm now. May not be as heavy as a proof as a formal email or a letter.
Correct.
That's a great recommendation. And would you recommend obtaining cash for someone who really doesn't have the money for nothing of the basics, on credit lines, cash advance on credit cards, or any loan or retirement plans or insurances?
Well, I mean, there will be certain cases where it's difficult to, get additional income, or it's hard for them to get back to work because they depend on an hourly wage or hourly rate. That's when clarity comes again into play. That's when it's important to understand what are all your sources of cash beyond your income. So, yes, you have to assess what are your options. So let's start with the examples that you mentioned. For instance, if you have a line of credit or a credit card, in regular circumstances, I would advise against using them. But these are, particular new times, and in the middle of this crisis, I will have to say that if you have a credit card and you have an available line of credit, maybe in this particular time you will have to make use of it, because as you said, cash is king. You need to remain with your cash reserve and try to use other resources in the meantime, even though this carries interest charges in the future. But at least you are using credit and you're keeping your cash to pay for more basic needs like rent and food. But again, if you can avoid using them, then try to. If you can, then just go for it and use your credit card to pay for certain expenses. As long as you're paying for basic expenses. When I say basic expenses, I mean food. I mean basic services. I mean maybe insurance premiums. But if you're paying, I don't know, any non-necessary expense like the gym or any subscription that you're not using, then you're not being responsible in the middle of of the situation. You should avoid or cancel non-essential expenses, particularly if they're being charged through your credit card. Now, when it comes to taking cash advances from your credit card, I wouldn't recommend that. And the basic reason is because when you take a cash advance from your credit card, you're going to pay a high fee, which usually goes between 1% and 3% of the amount that you get on the cash advance, which is very high. And on top of that, you have to pay interest because that cash advance would count as a regular charge to the credit card. So definitely that's a no-no when it comes to finding cash for your needs. And when it comes to taking a loan from your retirement plans under regular circumstances, when you get money from let's say you have a 401k if you work in the corporate world, or if you have your own individual retirement account or IRA, on the regular circumstances, when you withdraw money before the regulatory age, which is 59 and a half, then you would be subject to a 10% penalty, meaning that if you, let's say that you withdraw $100,000, then you will have to pay $10,000 in penalties just because you're using the money for something different than retirement before the regulatory age, which again is 59 and a half. But under these particular circumstances, what's going on is that in the bill, there is a paragraph that explains that because we are in unusual times, in 2020, they are going to forgo the penalty, and you will be able to withdraw up to $100,000 from your retirement accounts without such penalty. The problem with this strategy or with this solution is what goes beyond the penalty, because most of the individual retirement accounts and 401ks, of course, they were invested in the capital markets. And as you know, in the last 2 to 3 weeks, there's been a crash in the stock market, meaning that the value of those retirement accounts went down at least 20 to 30%. So if you withdraw money from your retirement accounts, basically what you're doing is that you are actually assuming the loss that happened in the market, and you are forced to do it. I do understand if there is no other option, if that's the only source of cash that you have, because there's no way for you to make money, from work, or you are an independent contractor or a freelancer, and that's the only option that you get, well, then yes, you will have to take the loss. Thankfully, there will be no penalty this year, but if there is no other option, then okay, you can take them the money. And there's also other options out there that are basically related to certain people who have what they call permanent life insurance. They are like whole life insurance or or universal life insurance. That would be the best option if you have them, because when you get money out of the policies, basically from the cash value that accrues and grows over time, what you're doing is that you're taking a loan from that amount that is accumulated right there. So it's actually a non-taxable event because you're taking a loan from yourself. It's yourself just lending money to yourself. That would be the best option if you have it. But I know that not everybody out there has that particular product, but that's an option as well. But as long as you can avoid, taking a loan that represents a lot of interest in the future, and you can, exploit other options, I would go for the cheaper options. But again, each case is particularly, you have to analyze that individually. But again, clarity. You need clarity. You need to lay out in a piece of paper what are all your options and try to sort out what's the best way for you.
Great, thank you. Great answer. Because yes, the clarity, understanding what's a need and what's a want. Correct. And being able to separate them and stay with the needs. And then if you need to tap on some cash, get the less expensive option, or the that will represent you the less stress.
Absolutely. Yes.
Okay, great. And my last question before your final recommendations, if you have to choose what to stop paying, let's say you have your needs and they are all needs, but what would be I would say in your scale, what would be the most important things to pay in which order?
Yeah, it's hard to say, but I will have to go with this simple explanation. I always tell my clients that you have like 4 fundamental pillars when it comes to expenditures at home, or 4 fundamental expenses that you have and that any household must cover. And basically it's the roof over your head, the food, basic services such as electricity, water, internet, mobile phone, and also transportation. And when I say transportation, I basically mean that some people have like a car lease, so they're paying for a car loan. And of course you have to pay for the insurance because it's mandatory. So anything that goes beyond those 4 pillars, again, the roof over your head, food, basic services, and transportation, I will classify all other expenses as non-essential expenses that you need to cut. You need to put a full stop on those. Of course, there might be some of them that you may not have, put a full stop. You may have some ways to optimize those expenses or reduce the amount of them, so you can, control your ad flow in this particular time. So, for instance, some of my clients who happen to have a lease card, they are having a positive response from their car dealer. And when they call the car dealer, again, with the proactivity that I'm recommending, they found a new payment arrangement, and such arrangement implies no payments for the next couple of months, but the lease contract was extended at the end for 2 additional months, and there will be no adjustment in the amount that they're paying. So right there, they found a relief, right, when it comes to the lease. When it comes to people who are financing their car, well, they're in a different situation. And again, they have to be proactive and negotiate with the car dealer or the bank. And even though they might get an arrangement with no payment over the next couple of months, what's happening is that there will be no payments for 60 days, but still the interest will accrue. And then the amount they were paying, on a monthly basis will be adjusted in the future. But again, that was a tactic to alleviate the cash flow right now. And again, this is why it's important to call financial institutions to find a way to alleviate the outflows in these particular moments. But if it comes to the situation where you actually need to decide what to pay and what not to pay when it comes to the 4 fundamental pillars, I would go backwards. I will stop paying my car, because, with this social distancing and stay-at-home policies, you don't need transportation unless there is an emergency and you need to go, to the hospital or to the supermarket. Then after that, I would go with the utilities. But there's a particular caveat here. In the new bill that was recently approved, President Donald Trump requested from the utility services company not to cut services to anyone who hasn't paid in the last 60 days. So basically, there is a resolution, and it is requested from those companies to keep providing the services. And I mean water, I mean electricity, I mean mobile phone, and I also mean internet, so people can keep connected and with the lights on in spite of the fact that they may have not paid. So given that situation, you may choose not to pay services. What you will always have to pay is for food, because of course you need to eat, and the roof over your head, because you don't want to regretfully end with an eviction. But again, when it comes to eviction, by the way, in the bill there is a resolution that stipulates that if the homeowner has a mortgage that is related to any of the federal programs through the federal agencies, such as Freddie Mac, Fannie Mae, or FHA, they have a moratorium that lasts 60 days, meaning that over the next 60 days, there's no need to make any payment arrangements. It's just, all the payments were forgiven. And in 60 days, they're going to revisit the measure just to see if they need an extension. But again, this has to do with mortgages that are related to federal programs. There are other mortgages, as you know, that are related to private lenders or are negotiation with commercial, banks in the regular and traditional way. For those, once again, proactivity. You have to raise your fund, make the call, and see what kind of payment arrangement they have been negotiating with clients. Thankfully, most of the banks are, acknowledging the situation, and they're coming up with solutions with clients. And particularly if you are renting an apartment and you're having issues paying for rent, it would be helpful for you as a renter to explain the situation to your landlord and understand that your landlord may be in one of two situations. One, he might need that money to buy food for himself and family. So you got to come up with some sort of win-win negotiation, because in the end, he's a human being as well. You may not expect him or her to forgive, this month rent. Maybe you can come up to a point where you pay 50% right now. When things get better, you pay the rest, but at least you got to pay for something. Yeah. You're not going to get evicted, maybe, but again, try to understand, the landlord situation. But the second scenario is that when the landlord doesn't necessarily need the money, for himself or herself to live, but he got to pay for the mortgage. And for instance, I have an example. One of my clients, they found a letter, they had a letter that they were laid off because of the coronavirus crisis. So, she lost her job. So with that letter, she sent it over an email to her landlord, and her landlord said, okay, no problem, no payments for this month, but let me use this letter to turn to my bank and show that my renter is having issues, hence I'm having issues, hence the bank acknowledged the situation, and they came up with a solution where the bank stopped the mortgage payments for a couple of months. But again, they had the backup. They had everything written. That's why, again, it's important to have everything backed up by an email or by a letter, so we can all understand. And when the situation ends, everything is backed by written agreements, written acknowledgements of the situation, so we don't have any side effects or negative effects either on our credit score or in a regular, business relationships with landlord or any other lender.
Yes, it is important to note that when you said about the evictions,
yes,
that the fact that the sheriffs are not proceeding with the eviction doesn't mean that if a landlord is not willing to forgive you for the payment and
right,
they want to start the eviction process in the courts, they can. What will happen is that the person is not going to be evicted for now, but the process is going to start, and probably by the end of this crisis, they will be ready to evict the person. So it's super important, the communication. And I always say that the better the relationship between a landlord and a tenant, the more chances we all have to have, peaceful resolutions for everything.
I totally agree.
The landlord doesn't like the tenant and he's not happy with the tenant. This is unfortunately the perfect timing to let it go. So it's unfortunate, but again, communication is key for everything.
I agree with that. Communication and proactivity, that's the key right now.
Yeah. Okay, Julio, any final thought, any final recommendation other than communication and proactivity?
Well, I would have to say that we need to understand that the only thing that we can control is our expenditure levels. I mean, expenses depend 100% on our decisions. So we got to be mindful of those non-essential expenses and find ways to reduce variable expenses so we can focus on those 4 pillars that I mentioned: the roof over your head, food, services, and transportation. And beyond that, well, my advice is I know it's hard for some of us, but you got to stay at home, you got to stay safe. And while you're at home, I would have to say that it's the perfect time to think how we can grow personally, how we can grow professionally in the middle of the situation. So we can find additional ways of generating income, because it's crucial. It's very, very important to diversify our income sources so we don't depend on a single stream of cash flow and we don't go over this situation again, because crisis will repeat. I mean, there will be another crisis in the future. What we want is to be in a better shape when that time comes.
Yes, hopefully it won't, but that's true. But that's something I always remember you say. You always have to have a different source of income, because you never know when one is going to fail.
Correct.
Okay, thank you very much. Stay safe, and I really appreciate you taking the time to share your knowledge with us and your expertise.
No, always my pleasure. Anytime.
Thank you.